Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, we're going to switch gears a little bit. Shares of rare earth magnet producer NP Materials soaring in today's session, up as much as 60% right now, up about 50%, so just off its highs of the session. This is after securing a $400 million equity investment from the U.S. Department of Defense to build a new plant with a $1 billion financing commitment from JP Morgan Chase and Goldman Sachs. So we wanted to talk about the deal and what this really means in terms of U.S. capabilities of rare earth magnets. We welcome back Jim Litinsky. He's founder, chairman, and CEO of the $7.2 billion market cap NP Materials. He is with us from Las Vegas, Nevada. And we also have with us our own Joe Doe. He's Bloomberg News economic statecraft reporter who first introduced us to Jim just a few months ago. So thank you for doing that, Joe. Joe is with us in studio. Welcome to both of you. Hey, Jim, we want to kick it off with you. Welcome. Hey, lay it out for us. What exactly does this investment do for you, and what will it do for rare earth magnet production in the U.S., and when will we feel that impact here in the United States?
Absolutely. So there are three pillars to DoD's investment today. DoD made an investment in MP. They also provided us with a long-term, a 10-year price floor contract that allows us to earn a fair return on the commodity. And then they also provided a 100% offtake for a new magnet facility that we're building that will significantly expand. It will 10x our magnet capacity. What's so important about this is that with the supply chain, as you may have heard me say, if we have all the rare earths in the world, if we don't have the downstream, if we don't have the magnet production, or vice versa, if we have magnet production but don't have the rare earths, then it's all for naught. And so it's really important to look at this supply chain on a vertical basis. And so you really have to credit President Trump and his administration and of course our partners at the Pentagon for sort of looking at this challenge and recognizing that MP has put together a vertically integrated champion, and the best solution to kind of catalyze this supply chain is making a substantial commitment to us, which they've done. We're very excited about that. And lastly, I would just say that this is a huge win for taxpayers, because the structure of the deal is such that not only is DoD now economically our largest shareholder, but they have upside participation in both the commodity and in the magnet business.
Hey, Joe, come on in here because you understand this space like pretty much nobody else. Talk to us about what you see as significant about an investment such as this, especially from a position of economic statecraft.
Well, I wanted to ask Jim about that. Jim, I feel like you're underplaying what has come out today. Can you give us size and scope, put into context, why this is such a big deal in your industry and what's unique about it?
Thanks, Joe. It's good to see you. Well, I think not to get too wonky, but I would recommend, since we are on Bloomberg, for those in our investor relations, we obviously put out a deck for this morning's call, and I really encourage people to look at that, and we go through a lot of the economics, but I'll give you the summary, which is that we have totally transformed MP's business overnight. We've gone from, the challenge, Joe, as you know, is that the Chinese historically have sold rare earths at a substantial loss because they use it mercantilistically as a strategic source of control of the downstream.
Which is a way of saying that they'll flood, which is a way of saying, Jim, that they will flood the market to take market share, which is one of the things that has always scared investors away from your company and other companies in this space.
Correct. And so if you look at the math, we basically have transformed MP where we can earn, we have long-term contracted cash flows. So we have 10-year agreements where essentially, if you kind of look out normalized, we believe we can do 650 million plus of EBITDA. And this is, and again, look at the various parts, but this is taken our business from what was sort of a volatile commodity business to a long-term contracted economic platform, which enables us to make further investments downstream. And those investments downstream, we now have 100% offtake in DoD as a customer. And if I can, Joe, let me add one more point that I think is so important, because you hit the nail on the head about the Chinese flooding the market. The Chinese very thoughtfully realized that particularly when we think about physical AI and the future of warfare, robotics, drones. The Chinese are willing to lose billions to play for trillions of dollars of downstream market cap. And when we think about our great leaders in technology, whether it's Jensen Huang or Elon Musk talking about robotics being potentially the largest industry in the history of the world, rare earth magnets are important, very important, extremely critical feedstock to that. And so we've got to preserve that trillions of dollars of downstream enterprise value. And that obviously is what we're about at MP, is making sure that our downstream industry has that feedstock. And obviously today's announcement ensures that we can make those investments.
Jim, the Defense Department is famously not splashy about anything. It's hard to argue that this was not flashy. $400 million equity investment in a publicly traded company. Have they ever done this before?
I think it's a pretty unprecedented situation, and I think that this is obviously a very unique circumstance. And obviously, we are honored and humbled by it, Joe. And as you know, since we've been talking for many years, I guess there's the old expression of it takes a lifetime of hard work to become an overnight success. We've been at this for 10 years at MP. And actually, interestingly enough, today is the eight-year anniversary of my co-founder and I bought the Mountain Pass assets out of bankruptcy 8 years ago, where we began the turnaround to restore this full supply chain. And I think that DoD and the administration realize that we've got to look at the supply chain holistically. And hopefully this is a model for future other scenarios where we have strategic industries that we have to return, and we've got to figure out a way to take on mercantilist economics. And so this is, I think, hopefully a good model in doing so.
So Jim, to that point, you operate in a specific portion of sort of the rare earth space when it comes to these magnets. In your view, because you're in this space, where does the U.S. still lag, and where does the U.S. need to invest in order to try to catch up, if even possible?
Well, we're vertically integrated. So we at MP, and there's nobody like this.
But
in
I just
the world,
mean from a
not even
materials
in
and processing perspective. I understand you are vertically integrated, but what about for all of the rare earths that will be in demand in the near future?
Sure. Well, so there are two major categories. There are the light and the heavies, and as part of this announcement, DoD is actually also committing some capital for us to build out samarium separation at Mountain Pass. Samarium is a feedstock into a different kind of magnet that's actually really critical for military purposes as well. And so, essentially, Tim, if you want to refine rare earths, so forget the ore bodies around the world. If you want to refine and separate them to then become feedstock to magnets, there are two places to do it. There's sort of the Chinese sphere of influence or Mountain Pass, California. And so I think this basically catalyzes us to move downstream and really be able to have MP as an economic platform that can encourage additional investment, really in all spheres, in mining and across the stream all the way down to magnets.
Jim, I think people are listening and they're like, yeah, if we're thinking about developing our supply chains here and creating national security for things that are so important to so many different aspects of our lives here in the United States, people are going to say, yeah, this makes sense. But do you feel like this is potentially a step towards you becoming a state-owned enterprise?
Oh, not at all. Not at all. In fact, I think it's actually the opposite, which is, for the first time, we see an actual data point of how we in the West, with free market capitalism, can take on mercantilism, but doing so in a way that is along with our value system. So let's be very clear about this. DoD is becoming economically our largest shareholder, but they are, they will vote with our board. And they expect us to be a thriving public company. They want us to continue to run the company for shareholders. And obviously their interest will be a benefit for taxpayers to the extent that we continue to compound, which we expect. And then they also have upside sharing. And so I want to really remind people that if you look at this deal, it was a win-win-win. Obviously, the market likes it. I think our economic platform has totally changed. But we're serving a key national security initiative, enabling trillions of dollars of downstream enterprise value to be more secure. But the taxpayer also has upside in this. And so I think that this is sort of, again, it's a new model. It's unprecedented in a sense, but it's, of course, because we're facing a challenge that we haven't faced before.
Yeah, I guess on some level, Jim, the upside the taxpayer has is if your stock goes up, the investment that the DoD has in it goes up. I was talking to an investor today asking about this, and I said, well, what does it mean for the taxpayer? And they said, really, all it means is a better bet on national security issues. So I might push back on that.
If I may push back, because and if you look at the structure of the deal, it's not just the shareholding. There are three pillars. It's the shareholding. There's then upside participation in the commodity. And then there's also upside participation in our magnet business. So there's actually three different mechanisms of upside sharing for the taxpayer.
And can you clarify one thing in the details? Yeah. The agreement, it's $130 floor, right? Or is it $110? Sorry.
$110.
It's $110 floor. That is just for the actual concentrate, refined, and metal. That is not batteries, right? Sorry, that is not permanent magnets.
That's all NdPr products. So you're right, concentrate, oxide, and metal.
So it's
and then
commodity.
When you move downstream, though, we also have 100% offtake for the new facility that we're going to build called 10X. And as part of that offtake, we'll have a minimum EBITDA guarantee, and then there'll be a catch-up for DoD, and then we'll share. We're 50-50 partners. And so again, Joe, this is a transformational public-private partnership.
Right.
But the taxpayer was really well represented in the structure.
But Jim, one thing, you probably will be getting a lot of pushback from investors, from media, whoever, saying what we just brought up, which is your biggest stockholder will be the Defense Department. And doesn't that bring a concern that the federal government has so much say in what is supposed to be a publicly traded private company?
Yeah. Well, actually, interestingly, as part of our deal, DoD will be voting their shares with our board. And so I really think that this is, again, it's a new structure that contemplates the fact that we need to be a successful public company. So this is very different. I know that maybe there's historical examples of where the government needed to come in and rescue an industry. It's actually the opposite of what's happening here. The government wants to achieve an important national security objective. And we at MP are able to help them achieve that objective. And so they are going to help support us in accelerating investment in our space. And they're going to create the conditions that allow us to invest with a fair return on capital and not be attacked, so to speak, by mercantilism. And in exchange for that, they're going to expect some upside. And so again, I think hopefully it's a new model that we can utilize across some of these verticals that are really challenging for us, where we've been unable to fully reshore industries because we're facing competition that is thinking differently. Again, go ahead.
Sorry, we only have a minute left, and I just want to hear from you how this deal came together and the timeline here. Who did you speak to? Who first reached out? Trips to Washington, trips to Chicago or Nevada? Like, how did it all come together, and when did the discussions first start?
Yeah, well, we've been having a great active dialogue with the Pentagon going back to the first Trump administration and through the Biden administration, and now obviously the Trump administration. And obviously this is a nonpartisan issue, getting this supply chain back. Suffice to say that what we have been, as you know, in our mission, we've been focused on this single point of failure since the inception of the company. Post-Liberation Day, as we saw the Chinese utilize rare earth magnets in the trade disputes, that basically the cutoff of rare earth magnets had the threat of sending our economy into a deep tailspin. And so that really certainly accelerated some of this discussion.
Got to ask you, though, did you actually talk with President Trump about this? Like, who finally said, got to do it, signed it?
Well, I think you can look at the transaction documents, which were signed at the top levels of the Pentagon. So this was a conversation from the very top levels of the Pentagon.
Is that a yes on Mr.? Is that a yes on the president?
Yeah. So this is again, I don't want to specifically name names of who we spoke to and how the conversations went about. But again, how about this? I will tell you that the president has directly mandated that we fix this supply chain. And so that is public. You can see that. And so the president mandated the secretary on down to fix this supply chain. And I think that this is really bold and decisive action to make that happen.
Well, investors certainly taking Investors certainly taking note. As we said, your stock up 50%. I'm going to say thank you, because there's three of us, and we really appreciated your time and getting having a conversation with you on this, because it does sound like it's pretty significant in terms of what happens with rare earths here in the United States. Jim, thank you. Stay in touch. You bet. Jim Litinsky, he's founder, chairman, and CEO of MP Materials. And of course, our own Joe Doe, Bloomberg News economic statecraft reporter. He's going to be back with us in the next hour. Joe, thank you so much.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Airlines definitely in focus on this Thursday, rallying. So too are many stocks in the travel and leisure space, trading up thanks to Delta Airlines, which reinstated a profit outlook for the year and said travelers are coming back, prompting its stock to surge amid a fresh sense of confidence in the beaten down U.S. consumer. Just one number I want to throw out at you. S&P Super Composite Airlines Sub-Industry Index rallying close to 12% today. It's still down 5% year to date. So a little bit of perspective. Up a lot today, but still down for the year.
Well, here with a look at the airline space, great to have back with us Sheila Kayalu. She's managing director in equity research at Jefferies. She joins us here in the Bloomberg Businessweek studio. Sheila, 3 months ago, we would have been sitting here talking about Delta being the first major carrier to pull its guidance. Perhaps a couple days later, we'd be talking about United coming out with those two different scenarios. A lot has changed in just 3 months. What happened?
A lot has changed, but I also think it hasn't. So I'm not really buying this burst with the airline performance. Delta did reinstate guidance. The midpoint's about 50 cents higher than what the street expected. But I think trends are stable. So they're taking up estimates about 10%, and that's what's moving all the airlines. But I still think it's haves and have-nots. So if you look at Delta's numbers, main cabin was down 5% in terms of pricing. Like, what do you see that's down 5%? And you think that's a stock that should be up 15%, especially when you look at American and Southwest's performance.
So is the main cabin issue, and I was going to ask you about that, because there was some positivity and optimism at the front of the plane and for premium international and for loyalty stuff. But if you're not filling the main cabin, then that's a sign of a consumer that's not at the extreme high end, not doing so well, right?
Yeah, I think the low end consumer is still in the same position it was 3 months ago. And we could see that with the down 5. But Delta is adamant that they're going to exit the year probably in the positive territory. And I think that's a still show me story. But I think for some of the other airlines that are seeing the same performance as Delta is today, with the exception of United that had an 8K out last night just to steal some of Delta's thunder, because that's the way they work, is American and Southwest are up about the same amount. And Southwest is delaying some of its initiatives, which means there's probably book away. They have an activist involved who wants them to do assigned seats, et cetera, charge for bag fees, and they're delaying some of those initiatives to Q4. So I think it still shows that the consumer's soft and Delta's guidance is fine, but it still reflects a second half that's improving from what we saw in Q2.
Consumer soft because of, it's interesting. Let me go back for a second, because Delta's CEO, Ed Bastian, said travel in the U.S. is recovering, corporate travel is strengthening, with consumers becoming a little numb to ongoing trade disputes. So you say a little bit softness in consumers. Is it because of trade? Is it because of
main cabin?
The economy?
Mostly the main cabin. But one of the things they did say that was interesting was July was one of their best cash days ever. So they're seeing some advanced bookings come in.
Okay.
So the consumer is becoming immune because they're seeing some visibility. They're finally booking their holiday. Whereas although Q2 free cash flow was good, they said they missed out about $500 million of free cash flow because people didn't book vacations yet. So they weren't putting the ticket prices down.
So they were holding back.
Yeah, so they have some, green shoots of confidence, but I still think it's mainly because the premium's really solid.
Like, I think of some of our business travel. We've done a lot in the last, I feel like, 4 to 6 weeks, and some West Coast trips and stuff. And some of the flights, the tickets were a lot. Some of them not so much.
Yeah.
Like, it was quite a range, and it was all business class.
I guess it's has a lot to do with it. I mean, it has to do with the competition on the routes and the dynamic pricing and how many people have bought tickets, et cetera. One thing that I'm still surprised about is business travel still hasn't completely recovered to pre-pandemic levels.
No, and even air traffic is only up 4% versus 2019 levels at the end of last year. So we've lost out on 5 years of traffic, which I think is surprising for most.
So Ed Bastian at Delta said that business travel is down 15 to 20% since pre-pandemic.
Yeah, I think it might be at 90% recovered.
Okay.
So it's a little bit less than that. And it's better for Delta than it is for others.
Does it ever come back completely?
I think so. I think people want to do in person. You know, at Jefferies, I think we have a 4-day mandate or 5-day mandate. I forget. I think I obliged to it. But in general, I think it's in person. I was in 3 different countries in the last 4 weeks. So lots of business travel on our end, too.
How does geopolitics impact any of it? Or how do you factor that into some of your research?
I think we're seeing some of that. So one of the interesting things about transatlantic for Delta, their Atlantic has been really strong. Tough comps with the yields, because everybody wants to go to Europe. Mm-hmm. But what they're seeing is Europe point of sale. So consumers in Europe are hesitant to book and have trips into the U.S. And we'll hear from like Air Canada that I cover, if Canadian consumers are not necessarily coming to the U.S., whether that's a currency issue or whether it's just political stigma. So that's one of the things to keep an eye out on as well.
United's actually outperforming Delta today, up more than 15.5%. Why is that?
Few things. I think the book away with the Newark issues was only around like 1/3 of a point. So 30 to 40 million, even though I did book away from United.
So did we. We canceled United tickets to fly out of JFK instead.
So I think it's...
We have some credits that are like waiting to be used.
It's a very small percentage, so I think there's some relief rally there. I think second, United is the most exposed to premium in addition to Delta. That being up 5 is giving some positivity. But most importantly, they paid some debt down. They're de-levering like Delta is. Delta also raised their dividend 25%. And their implied cash with their in the 8K was $730 million. Free cash flow in Q2 for United. Consensus thought it would be a loss of about $1 billion.
So that's a real big
swing. And so United numbers look good based on that 8K.
Anything we could, we get the Delta results. We're going to start to get a lot more coming out. We've got, American Southwest July 24th, JetBlue in August. We talked about United officially coming out with their numbers next week. Is there anything like we can kind of play against the industry based on what Delta is? I know they're not all the same. So how do you look at that in terms of Delta?
We only have a buy on United, but we're definitely more negative, the lower cost carriers. So Southwest, we just upgraded from a sell rating to a hold a few weeks ago, but still we're a little bit more pessimistic on the lower end consumer. And I think American, as like the third network carrier, especially on the Atlantic side, they tend to do a lot more discounting to get that transatlantic yield as well. So I still think United and Delta are the way to play it. We're long United because they seem extremely confident, put out an 8K before your biggest competitor just to steal some of their thunder. It's like kind of amazing that they did that.
Did they front run results essentially?
It was implied, so it's hard to back into what their cash is. But that's a big swing that they put up, positive free cash flow. And so, but cash at Delta was also good, and they're both deleveraging. They're both trying to say, listen, we shouldn't be 10 times stocks, 10 times earnings. We could give out dividends. Delta talked about its dividend yield being sub 2% yield, which is better than the market.
Are the challenges at Newark behind United?
Yeah, June for Newark was the best performing airport. So it still seems like air traffic controllers need to get in, but now that the runway issue has been fixed, Newark is coming back. And Newark, for context, is about 10% of United's capacity.
Wow.
So it's a lot. Hey, listen, no, it's just interesting. Well, I was going to just follow on that like I keep thinking about, my husband used to fly a small plane and he's constantly looking at how crowded the skies are. Like, are we getting to a point where it is too crowded in terms of the traffic that is up there and that we'll have to kind of adjust, or no?
I think we need more air traffic controllers. Retirement age is 55 and takes 2 to 3 years. The attrition rate is quite high. And so we do need more support. So one of the things that's interesting with the big, beautiful bill is there's $12.5 billion of additional funding for the FAA. So that could be seen as positive, push modernization forward. We think the FAA budget is about $22 billion. So it would be doubling the budget. We don't know if that's all in 1 year.
Right.
It's hard to quite see that. But we definitely need a push towards modernization and using AI to help us fly better.
Speaking of flying, let's talk a little bit about Embraer and what's going on with shares today, or ADRs today are lower. This after the president said yesterday more tariffs, or new tariffs rather, on Brazil. What is the economic impact in your view on Embraer of these tariffs?
You have a note out on this.
I don't know if I believe these tariffs in the first place.
Really?
Yeah, let's assume they actually happen.
Okay.
It would be most impactful to Embraer, but most positive for a company called Textron I cover that makes small Cessnas, and here's why. And it's actually negative for American Airlines too. So twofold issue. So Embraer is a manufacturer of commercial aircraft. They make smaller aircraft than Boeing and Airbus. And the biggest backlog associated with that is basically American. American has 92 Embraer jets that Embraer has in its backlog out of the 250. So with the 50% tariff, it would increase Americans' capex by about 15%. So obviously they might reconsider that order. So negative from that perspective. I was actually in Sao Paulo seeing Embraer's facility, really neat last month. But obviously they ship it back to the US, so it would be a tariff product, and it doesn't seem excluded. The second impact is Embraer's executive jets. And Embraer, 60% of their jets go to US customers. Although they manufacture some of it in Florida, there could be a tariff there. So we thought some book away goes to a company like Textron.
Wait, can't they get around some of these tariffs the way that airlines have tried to get around Airbus's tariffs by essentially flying the plane? And look, forgive me, I don't know the accounting, but I've read stories about how they're able to buy the plane from another country and then the tariffs aren't as high. Yeah,
I think we're yet to see it. We don't know how they'll do it, but one of the workarounds is potentially flying an aircraft to, say, a non-tariff country, and then you register it there, and then you fly it back into the U.S. We'll see. Okay. I mean, on the private jet industry, it's a lot easier to do that, but if you're a high net worth individual that could buy a Latitude for $20 million and a Praetor for $20 million, and now your Praetor's more expensive, do you really need to think about that? All right, so that's why Textron shares are up today off the Embraer call.
No, you're right, because it was in our right through too. Off of your note, because of the selling that we're seeing in Embraer. Just got 30 seconds, unfortunately. We could go through more airlines. What is it that you think in the airline space is really interesting that we're not talking about? And forgive me, because I only do have about 35 seconds.
Ooh, airline space. I think premium, the premium offerings are getting really good, whether it's Delta One or United Polaris. Delta is sort of sneak previewing a even higher end business class that they might launch. They just opened their 4th Delta One lounge in Seattle. So lots of new upgrades to come, and that's making it a better travel experience, but only for the premium customer. The main cabin's still suffering.
It's like the K-shaped economy in flying, right? Like the haves and the kind of have-nots. I'm just going to say. Sheila, thank you so much. Sure. Sheila Kayualu, she is, of course, Managing Director in Equity Research over at Jefferies, joining us here.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Lots of news in the Elon Musk universe. The billionaire, world richest person.
Nothing's ever going on in the Elon universe.
Every day. I think I could say that every day.
I know.
He makes it like that.
I feel like there's something every day.
Sometimes I go in and look for tweets that he wrote to cite them, and then it's like you have to scroll 30 tweets to find the one that he wrote like an hour ago.
And then Elon was with me on my train when I got stuck, and the train wasn't
literally
moving. No, not literally.
Not literally.
Courtesy of X.
Well, you were watching that because the AI startup XAI is rolling out Grock 4 just months after releasing its previous iteration, underscoring the frenetic pace of AI development. You were all over that earlier this morning, Carol. The news coming the same day, though, yesterday, that Linda Yaccarino announced she was leaving the social media company X. Kurt Wagner is the guy to answer all of these questions about these things. He's Bloomberg News senior technology reporter. He covers all things social media. He's also the author of Battle for the Bird, Jack Dorsey, Elon Musk, and the $44 billion fight for Twitter's soul. We'll talk about the company formerly known as Twitter in a second, but first I want to talk about Grock and really what Grock 4 is and how you compare it to what else is out there on the market, Kurt.
Yeah, I mean, part of this is that we're going to have to wait and see, right? We've heard Elon talk about Grock 4 and how great it's going to be and how, it's equivalent of every PhD student ever in the world combined and is smarter than that, right? But until you really get your hands on these things, it's hard to say. What I will say is the timing is interesting. You saw this week that the version of Grock that we have right now, Grock 3, was spewing this anti-Semitic stuff. And I think what that tells me is that no matter how good these chatbots get in terms of the technology, it still really depends on how they're trained and who is sort of filling the information into these bots, right? Because Grock 4 could be the most advanced thing of all time. If it's spewing anti-Semitic comments to users on X, it really doesn't matter, right? And so to me, we need to sort of wait and see. I realize that's a bit of an unfulfilling answer to this question, but it's just too early. And all we have right now is sort of Elon's praise for the bot to go off of.
Grock also coming to a Tesla soon near you. This is what Elon Musk said too. So what is that? Like, is that just giving more data to Grock? Like, I don't know. What's that connection? I guess I get it on some level because it's the Elon universe, but what is that?
I was going to say, like, the Elon universe is like this ever morphing, melding thing. We've talked about, the three of us have talked about this before, but like this idea that one corner of his universe just kind of gets pulled into the other, this is pretty common. So I'm not surprised, but this is how I'm thinking of it. And again, new information like this can all evolve, but hands-free, right? Like the idea that maybe you're already using self-driving, but let's pretend you're doing it the old-fashioned way. You're driving yourself around and you want to safely, figure out the best route to where you're headed. You need to ask about a headline you thought about earlier. You want to make a call. Like, you want a voice assistant that is ultimately high quality, that's going to be able to do all those things safely, right? So maybe in a perfect world, Grock serves as your co-passenger, your co-pilot here on a trip, so that you're not like pulling out your phone or tinkering with the screen in the Tesla. Now, I think a lot of this is sort of idealistic because we need to see how this is implemented. And also, again, like, how good is Grock? Is it reliable enough to do those types of things? But I think in the perfect world, imagine it as the hands-free co-pilot there for you in your car.
Well, if you bring up the point about some of the challenges that Grock 3 has had that has been well documented in terms of coming up with anti-Semitic posts and the like on X and sort of what we've seen shared out there, Kurt. How do we know if Grock 4 or how does XAI solve this if it hasn't really solved this for Grock 3?
Yeah, and I think that's sort of the challenge, and I think the issue too is like the anti-Semitic comments that came out of Grock 3. Those happened just over the last couple of days. Grock 3 has been out for months before that, right? But there was a tweak. Elon was talking about like a tweak to the chatbot, and all of a sudden it's now sharing these really horrible posts. And so these things can evolve very quickly depending on, again, what type of information is put into it, what type of guardrails are in place for how these bots should or should not respond. So I'm certainly not in a position where I'm like, oh, they fixed it, Grock 4 is going to go off without a hitch. I think the timing of the incidents they had with Grock 3 right before this rollout actually make me much more skeptical about Grock 4. But again, we sort of need to wait and see. They clearly, at the very least, acknowledged that was a problem, right? Sometimes they've had issues and they just kind of refuse to even acknowledge the issue. In this case, they acknowledged, hey, this was inappropriate. These types of answers should not have been coming. I know that's the bar is incredibly low, guys, but I take that as a good sign.
I am wondering, Kurt, that Elon's time in the government and Doge, how much, can we make any assumption that there was information and data that he had access to that is kind of going into Grock? Will we ever even know?
It's a great question. It's one we've been all asking about actually for months. There was this idea, you may remember, when he asked employees of the government to basically say, hey, here are the 5 things I did this week, right? Like basically justify your job. Send us an email with what you did. There was speculation around that time that the only way to really sift through thousands and thousands of emails of a list of 5 accomplishments was to rely on AI. Now, as far as I know, there was no reporting that sort of confirmed, hey, Grock was being used, or that certainly sensitive government information was being put into Grock, or that Grock was being trained on that type of stuff. But again, there was a lot of speculation, given what Elon does, given his focus on this AI, that maybe it was used behind the scenes to sort of, help with some of these tasks, maybe help with where cuts should be coming from or not coming from. I don't recall, again, that ever being confirmed with reporting, but I think you're asking a question that a lot of us have been asking for months now, was there a relationship there beyond, just the way anyone could use it publicly, right?
Mm-hmm. Yeah, exactly.
I want to talk about X, Carol.
Let's go there.
Kurt, your morning newsletter that I read earlier today about your view on Linda Yaccarino leaving the company formerly known as Twitter X. I think you were like many people who thought she wouldn't actually last 2 years at the company, given the history of high-profile people at some of these companies and sort of just what was happening at X in the early days. What do we know about her exit, why she's leaving, and sort of what this means for the social media platform moving forward?
So we don't know a ton beyond. I can tell you that this has been in the works since well before this most recent Grock thing. As far as I know, I don't want to say that that wasn't a factor necessarily, but it wasn't like she was all in 5 days ago and suddenly she's all out. I think that this was something that had been in the works coming before this. Now, whether the Grock incidents, expedited a timeline or not, I can't say for certain, but I think this is something she was planning to do before. Now, what this signals to me, and what I tried to get across in that newsletter, is that this might not just be a change of leadership at the company. It could be a change of identity at the company, right? Because when Linda Yaccarino was hired, she is was a well-known media executive, advertising executive. And so this was a signal that, hey, advertising is sort of the bread and butter. This is how we'll continue to make money. That's where the person in charge of this company has her time, energy, and focus. If Yaccarino is replaced by someone with an AI background or an engineer, a product person who's not focused on advertising in the same way, I think we could be witnessing sort of a transition of X as an ads platform to X as something completely different. It may be that fighting with advertisers for 0.5% of the global advertising market is no longer worth their time and attention. And instead, this platform becomes a data provider for Grock or other AI products in the future. And so that was sort of what I was getting at in this newsletter, is like, this might not just be the end of her time there. This might also be the end of us thinking of this as like an ads business. And maybe we need to start thinking about what X can become in a different way.
Like a media company being used for some other end. Some of it, might be for folks who want to have, a mouthpiece or so on and so forth, or like, I don't know. It's just kind of interesting.
That makes me concerned about the data that X is getting, or that XAI would get. Because
that's not great data?
Yeah. Like, I mean, what they say, Kurt, garbage in, garbage out. I mean, my feed, I'm sure it's my fault, but there's a lot of stuff on there that's not necessarily the correct answer to things.
Well, Grock's already being trained on X data, and that might explain in some ways why we saw what we saw with these anti-Semitic posts over the last couple of days, right? Is that it has to be trained to think that way or say those types of things. And if you are taking the fire hose of posts from X and putting them into Grock, that might be the outcome that you get in some instances. And so it's not new. This idea that, Grock is suddenly going to be trained on X, like, this is already happening. Yeah. I think for me, it's more like, is that kind of the sole purpose of why X exists moving forward? Is it sort of like Elon Musk's personal sort of megaphone playground plus the training fuel for AI stuff that makes the real money down the line? That feels to me like where we might be headed. Now, they could surprise us. They could replace Linda Yaccarino with some other major advertising executive, and all of a sudden I'll come back and talk with you about it and say, hey, my take was certainly wrong. But I think her stepping aside sort of paves the way for them to leave advertising behind a little bit and move in a different direction.
Kurt, just quickly, 25 seconds though. Are advertisers really going to come back in a big way as long as Elon is somehow political? In whatever form that is, just quickly.
This has been the Achilles heel for this company since he took over, is that you have a brand advertising business, but you have an owner who constantly does and posts things that are not necessarily brand friendly or brand safe. And so that's been the rub. And until he sort of changes the way he behaves on X, I just don't see that really being settled in anytime soon.
All right, Tesla shares, though, we should point out, up about 4% in today's trade. Hey, Kurt Wagner, so appreciate it. Bloomberg News senior technology reporter covering social media.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. Just coming up on about 18 minutes to go until we wrap up the trade on this Thursday. Carol Master, Tim Stanovic live in our Bloomberg Interactive Broker studio. You heard both Bill and Charlie breaking down the trade, and we are hovering near our highs of this session. We'll see if ultimately we can get another record close here on the S&P 500, but quite a run and quite a bounce back from that near, was it bear market correction? I know, I always do that.
You are going on vacation soon, so...
I don't even drink a lot of beer. Bear beer.
Yeah,
Bear
we're up
beer.
25% roughly since April 2nd.
I know, so quite a bounce back, right? So let's see what Veronica Willis has to say about all of it. She's global investment strategist at Wells Fargo Investment Institute. They've got about $44 billion in assets under management. And she is joining us from New York. Hey, Veronica, good to have you here with us. It's been an interesting market year, and we're about halfway through. Talk to us about what's kind of top of mind for you as we get ready for another earnings season. We continue to digest trade tariff news that seems to continue to come out of the White House. What's top of mind about the investment environment for you?
Yeah, I think top of mind right now is to expect a little bit more volatility for the rest of the year. The market's seen a really impressive rally from those lows earlier this year. Maybe has gotten a little bit ahead of itself. There's still some uncertainties related to trade. We've got, earnings season coming up, which could start to see some of those impacts around that uncertainty around prices and uncertainty around tariffs. So it could be, a little bit more volatility to come for the rest of the year.
A little bit more or maybe a lot more if these tariffs stay in effect come August 1st?
It's really dependent on, what we see ultimately for the end state for the tariffs. And that's where all of the uncertainty is. So we don't really know what those are going to look like. The worst case scenario is going to cause a lot of volatility for the markets. If they're not as aggressive as what they've currently been announced, if we're able to get some negotiations between the U.S. and some of the trading partners, then we could see a little bit less volatility.
So I am curious, you guys have a bunch of strategists, a bunch of analysts. I can only imagine some of the conversations you're having back and forth. And I do wonder if you feel like you have more questions about the outlook or more answers. Do you feel like there is more things that you can kind of cross off your list?
There are definitely a lot of questions and then a lot of scenarios as the answers for those questions. So that's a lot of what we're talking about are, the different tariff scenarios and how that might impact the economy. With the signing of the One Big Beautiful Bill Act, that takes one uncertainty off of the table. So we know what the fiscal policy is. We don't know quite what the full impact is going to be to the economy. So that's still a question as well. So it's a really interesting time with a lot of questions.
Yeah, I feel like more questions than answers for a lot of investors out there. We've spoken to some people this week who have said, hey, that August 1st deadline for tariffs, we see that as serious in the sense that we don't think the president is going to extend that deadline again like he did from July 9th. Remember, yesterday was supposed to be the day that the extension expired, but it was extended this week to August 1st. What's your view on that?
Yeah, I think there's always the possibility that it'll continue to be extended, whether the president says that it will be or not. So that's exactly what we saw with the July 9th deadline. So that's always one of the possibilities. Then there's always that possibility that we start to see some agreements and some negotiations happening and get some more clarity before that August 1st deadline. So there's really just a lot up in the air.
All right, so there's a lot coming at investors, and yet we talked about this with our Gina Martin Adams of our Bloomberg Intelligence team. She follows and covers and directs U.S. equity universe coverage for us here at Bloomberg Intelligence. Torsten Slok over at Apollo also has a note, and noting the concentration, extreme concentration in the S&P 500, returning to extreme levels, with the top 10 companies accounting for 40% of the index's market capitalization and a record high share of earnings. And Gina talked too about some of the Mag 7 names, that the outperformance of big tech names, NVIDIA hitting $4 trillion in market cap yesterday. Investors are really moving into those names, and maybe it's not as much of a broadening out. Is that a dangerous sign for you? What's your read on that and what it says about the investment environment? And once again, see that concentration.
That is a concern. And, we've seen it play out throughout the past couple of years where, the Mag 7 was pretty much the only thing driving performance for the S&P 500 as a whole. And if we return to that type of environment, any kind of shocks in any of those big names, that's going to be what drives the market down, and it can happen really quickly. And so we like to see that performance broaden out a little bit to believe that we're in a more sustainable rally. So that's part of why we're thinking there's still going to be some volatility throughout the year. We're not necessarily buying into the belief that we're just straight up from here. We need to see that performance broaden out a bit.
What about when it comes to geographical performance? There was a big narrative at the beginning of the year and even toward the middle of this most recent quarter, really focused on the outperformance of equities outside of the United States, specifically European equities. What are your views geographically for the second half of the year?
So we do think that, that global diversification, having that exposure to the international equities is important as part of a diversified portfolio. So that's played out really well this year. We think it will still play out well throughout the rest of this year. But we do think eventually when U.S. economic growth starts to recover later in this year, early 2026, that we'll start to see that U.S. outperformance resume.
One thing I want to ask you before we wrap up here on this Thursday, bank earnings kick off next week. JP Morgan coming out along with the other big banks. I'm looking at the KBW Bank Index. It is up it's up about 38% year to date. I was going to say almost 40%, not year to date, forgive me, from that April 4th low. So we have seen a tremendous rally. Overall, the index is up 13% year to date, and that easily is about double what we've seen in terms of the return for the S&P 500. So some mega outperformance. What do we need to see in terms of earnings to justify the moves that we've seen already? Or do you think there is room to continue moving higher? And again, just got about 30-40 seconds.
Yeah, I do think there is still some room to move higher. The market's expecting some deregulation that should benefit the banks. And so I think that's driven a lot of that performance in, financials overall. I think with earnings next week, we'll need to see some kind of follow through. So we need to see some good earnings reports from these banks to buy into that rally. So it'll be really important to watch.
All right, we're going to leave it on that note. Hey, Veronica, thank you so much. Appreciate you. Veronica Willis, Global Investment Strategist at Wells Fargo Investment Institute. They've got roughly $44 billion in assets as of February of this year. So good to get her view.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.